Another crack in the property market. Hello again, I'm Martin North, Principal Analyst at Digital Finance Analytics. There are a whole range of satellite businesses surrounding the property market, from aggregators, brokers, insurers, and financial managers. It's a complex web, all of whom have been enjoying the feeding frenzy of recent years. But that could now all be changing. And I wanted to make a quick piece tonight on what I think will prove to be a signal of what may be ahead. There was some big news today as Deposit Power, which provided interim finance to property buyers, closed its doors after the collapse of New Zealand's CBL's insurance, which was an insurer and guarantor of the deposit bonds. This may leave up to 10,000 residential, commercial and property investors in the lurch over some $300 million worth of deposits. Think of this as a form of insurance that guarantees the deposit will be paid. They have been particularly popular in Sydney and Melbourne's bull property markets, where buyers needed to move quickly and juggle their cash reserves. They were also heavily marketed to first-time and off-the-plan property investors. So this could have a significant impact on the high-rise developments being constructed around the main urban centres. Deposit Power's value proposition was to assist property purchasers to transact even when they did not have available funds for a deposit by offering a deposit guarantee. A deposit guarantee is an alternative method of placing a deposit on a property. It is sold as an option for buyers that don't or can't use cash for a deposit, often because they're waiting for a settlement, have invested in a fixed-term deposit, or are waiting for investments to mature. Deposit Power had links with most of the major property broker networks, including Mortgage Choice and Connective, and major banks through their broker networks. Deposit Power is also on the product panel of most of the leading mortgage brokers and aggregators. They oiled the wheels on a vast range of property transactions. Mortgage brokers have used deposit guarantees as an alternative to potentially more expensive lenders' bridging finance, particularly for first-time buyers who are eligible for a state government grant after settlement. The property buyer provides a guarantee certificate to the seller's representatives until settlement, which can typically range from 6 to 48 months. Deposit Power's bonds were sold to individuals, first-time buyers, retirees, self-employed borrowers, trusts, corporate entities, or self-managed super funds purchasing commercial or residential property. It's been established since 2012 and is regulated by ASIC. So we don't know yet whether there will be any opportunity to recover funds from CBL, but in New Zealand, the liquidators are warning that those insured by CBL or any beneficiaries of its policies should seek legal advice as to whether they need to buy other cover or secure additional or replacement financial risk bonds. So there are fears that the status of existing deals, which use the deposit bonds as a form of bridging finance for up to 48 months, could be jeopardised by the collapse of the insurance company. So there is certainly a chance that the business might be sold, but this collapse has the potential to be yet another hit on the property market, and especially on the new build sector, which is already under pressure and discounting heavily to try and sell properties which are currently being built. But more broadly, it highlights the complexity of the sector, with a number of actors providing insurance, whether it's a deposit guarantee or lender's mortgage insurance. So in conclusion, I think this is a really big deal, and it's a signal of further trouble ahead in the property sector. If you found this useful, please do like the post and add a comment or question. I read them all. If you've already subscribed, thank you. I'm really grateful for your support. And if you are yet to subscribe, please do so to receive future alerts. I'm Martin North, Principal at Digital Finance Analytics. Many thanks for taking the time to watch.